Alright everyone, welcome to another tax strategy video. But today, it's not really about tax strategy, so to speak, but we are going to talk about $80 billion that the IRS got and what does it mean for you as a business owner. Does it mean more audits? Does it mean more paperwork? Does it mean more agents? That's exactly what we're going to do. I'm going to bring you peace of mind if you watch till the end. I've broken everything down for you on this board, and then when we're done with this, then I have another board to show you with what exactly is IRS will be focusing on, most likely. We're definitely going to talk about that. Now, every Tuesday, I release a tax strategy video. I would love it if you subscribe, comment, like, and also make sure you hit the notification bell, because what happens is that when we do release a tax strategy video, you will be notified. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. All we do for our clients is save money on taxes, and my job is to bring it to you on YouTube and, of course, educate you. Now, let's get right into it. IRS received $80 billion, okay, as part of the Inflation Reduction Act, which is also known in our accountants world community as the Business Reduction Act, okay? I meant Business Destruction. Business Destruction Act, okay? Cool. So IRS got $80 billion and they're getting ready to get 87,000 new agents. What does that mean for you? Should you be afraid? I don't think so. But let's talk about that, right? Let's talk about that. But before we do that, it's kind of important to understand, because media, in my opinion, please, I'm not political, lies to you, or they want to make their news seems so interesting, so they have to scare you, okay, of everything that's going on. But nobody's going to share with you the details like I will. All right, first of all, let's break this down. What did IRS get their money for? They got $3.1 billion for taxpayer services, meaning taxpayers like yourself, they want to help you. They want to improve your online experience, for example, or when you call and you don't wait long on the line. They only got $3.1 billion for that. By the way, $80 billion is not going to come to the IRS all in one shot. It will be over the course of 10 years. That means IRS is not getting a check right now. As a matter of fact, I believe the first year they cannot receive more than 1.5 billion, and then over the course of 9 years, there will be more and more and more, okay? By the President Biden's administration, of course, right? So, $3.1 billion for the taxpayer services, which is, honestly, if you ask me, all $80 billion has to be for taxpayer services. Can never get a hold of the IRS. $45.6 billion will be for enforcement. Think of it as agents, auditors, right? And we're going to talk about this audit rate in a minute. $25.3 billion for operations support, whatever that means, right? $4.7 billion for technology. Guys, they have computers that are using the systems. I believe I've read somewhere in a recent article going back to 1960s, okay? That's how old their technology, some of their technology, not all of it, but some of their technology is. So only $4.7 billion? Like, when I was recently at the conference, and we kind of talked about it. Like, if you just allocate all the money or most of the money just to technology, like, everything else will kind of flow, right? The technology will build everything else. But no, this is how they decide to do it. Because the main concern, and think about it this way, right? The main concern why they wanted to push this bill is right here. It's because of the enforcement. As you can tell, more than half of it will be for enforcement. But there's a clause. The clause says, hey, while we have broken this down, you can use the money however you'd like. And IRS is going to be releasing their plan of action, how they're going to be using the money, okay? But that is how it was allocated in the bill. But IRS is free to use with this money however they please, okay? So let's talk about what's on everyone's mind. $45.6 billion for enforcements for the audits, right? And of course, the IRS says we want to audit, right? We want to audit, or we will audit for those that are making more than $400,000. You are considered a fat cat in America if you're making more than $400,000, which we believe is a bunch of baloney, at least myself in particular. They will not just focus on people who are making more than $400,000. They will definitely focus on less on business owners and individuals that are making less than that. Do you know why, ladies and gentlemen? Because people that are making more than $400,000, and of course IRS is looking to go after millionaires and billionaires, those people in most cases, right? Oh, well, maybe I don't know if I should say in most cases, but majority of them, right? Or high likelihood that they are doing tax planning and they're actually paying less tax than anybody else if they're business owners and making a lot of money because they're using the tax codes to their advantage. IRS is going to go after who? Mom and shop pops, small business owners making under $400,000. It's just how it's going to be, right? You can read the facts, you can look at everything that's going on in the news, and that's how it's going to be. And the media scares you that you're going to have audits. And in this video, we're going to talk about, is that really true? Okay, so a lot of money is being allocated to the enforcement. Now, as a matter of fact, they say that 87,000 new agents will be hired by the IRS. Can we take a look at statistics, please? Okay, this is important. As a matter of fact, I was never good at charts, okay, and I don't know how I did in my economics class. I don't remember, but I do remember I had a pretty good professor. Okay. Anyway, so we've got this chart. In 2021, as of 2021, we have statistics, right, that show that as of 2021, IRS had 78,661 employees. As of 2012, which means, right, earlier, before 2021, they had 90,000 employees. They had more in 2012 than they did in 2021. In 1992, ladies and gentlemen, IRS employed 116,673 employees. That is a big decline from 1992 to 2021, from 116,000 employees to 78,000 employees. So yes, IRS must hire more agents to make up. If anything, from 1992, if you're smart enough, you would realize we have more businesses, more entrepreneurs, more economy, more people. While we are increasing in economy and in wealth, we have less IRS agents. What do you think they need to do? Of course they need to beef up their game. It's not new agents that they're adding. It's to replace or add to the much depleting workforce within the IRS, because their budgets in the last 2 decades have been cut. And we're not going to get into political who and why, what it's going on, but you know, they brought it on upon themselves. And we're not going to talk about that here, why the Republicans, so to speak, were cutting their budgets. Now, back to us right here. I want you to pay attention to this area right here. As of I believe this is as of 2021 or 2022. I don't have the exact year for that, but IRS had 8,200 agents that are auditors. Okay, they're the ones who are coming to you and doing audits. They had a 50% decline in revenue agents from 1992 to 2021. 50% in those agents that are doing the examination, right? The auditors, so to speak, right? 35% decline was the ones that audit complex tax returns, okay? Think about it. IRS is not only auditing those that have complex tax returns. They're auditing everybody, okay? And we're going to talk about it a little bit later in this video, and I will change my board around. I will erase it out, right? About what exactly are they looking to focus on, right? But over here, let's just stay here. Now, we have 8,200 revenue agents right now, okay? That we have out of 78,000 employees, right? 8,200 are the ones that are auditing. You can imagine, right, that they have their hands full. Now, let's take a look at this statistic right here, ladies and gentlemen. In the next 6 years, IRS estimates that 35,000 of its employees, all their workforce, right, which is pretty much almost half of it, okay, will retire. Okay, they're getting old. They're getting old. IRS needs fresh blood, okay? Then, before retirement, they expect 17,000 people leave the workforce, leave the IRS workforce. So that's a whole whooping of 52,000 of decrease in their employees over the next 6 years. Okay? The guys, these are all statistics. I've just read it and I'm just sharing with you. All right? So bear with me. Now you're telling me IRS is going to be hiring 87,000 new agents for the next 10 years because they got $80 billion to be spent over the next 10 years. 45.6 billion is for the enforcement. So 87,000, guys, out of the 87,000, it's to replace these 52 first. So that means on average, IRS has to hire 8,600 employees per year for the first 6 years to at least stay even at 78,000 current employees, okay? And then after that, the difference right here is about 35,000 agents. They will be for the next 4 years, right? After 6 years, because we have 10 years, to add another 20, 30,000, 35,000 agents, okay? Now, don't get me wrong. I'm not saying that, oh, don't worry about it. Everything is going to be peaches and bananas or oranges or flowers, and we're not going to have audits. As a matter of fact, we will see increase in audits, but not by the whole 87,000 new agents audits, okay? IRS is trying to catch up of what it has lost in the past. It's been losing employees, but the economy has been growing. More businesses in America, okay? Think about that. So audit rate in 2010 was 1% of audits were being done, compared to now's 0.25%, 0.25% of audits that are being done. So if you're making less than $400,000, there are high chances that you will be audited, okay? You will be audited, and we're going to talk about in a second how to protect yourself against the audit, okay? Now, think about it. This is what IRS is trying to make up. They're like, hey, can we at least get to 1%? Can we at least get over here? And we know exactly who we're going to target, why we want to target them. We know exactly where the money is, because the whole point of giving IRS billions of dollars, so it can bring more to the to the treasury, right, back into the economy, because they're saying we can collect it from the taxpayers, okay? And who's the most easiest prey that they're going to collect it from, ladies and gentlemen? It's small business. Excuse me, it's small businesses, and that's why we're going to talk about how to protect ourselves and how to do proper tax planning. But I hope all of this is clear, okay? Again, just to kind of recap in 30 seconds before we continue. Think about it. In 1992, IRS had 116,000 agents working for them. In 2021, as of 2021, 78,000. 78,000 agents, okay? 82 of them are the revenue agents, the ones that go out and audit you and so forth, okay? Now, they're looking to add 87,000 new agents, but these are not all new agents, okay? Because what happens is that over the next 6 years, they're expected to lose 52,000 of their current workforce. You know, people leaving before retirement or for retirement, okay? So the first 6 years, they have to catch up and replace the 52,000 that they lost. Then they've got another 35,000 revenue agents that they're going to bring in, okay? And they're going to bring in and to make up the 87,000 agents that they've been given money for. All right, cool. Now, let's talk about who in particular, some of the areas where IRS is going to audit. Ready? Let's go. All right, cool. So now let's talk about what will IRS focus on in their audits. Now, this is not the entire list, right? But this is the most practical to the small business owner, all right? And that's exactly what we're going to focus on, and that's what I want to cover today. But first and foremost, ladies and gentlemen, I'm not saying in this video that, hey, don't worry, there is not going to be audits. All I'm saying is that there's not going to be 87,000 new agents more audits, right? We're definitely going to see the increase in audits. And we should not be afraid of an audit as long as we are properly, number one, protected, and number two, plan for it. Meaning, right, know exactly what IRS will be focusing on will already put us in a better position. Now, let's start talking about documentation. The key in every audit is a documentation. A lot of people are under the impression that bank statements and credit card statements are sufficient. Well, can't you see IRS on the credit card statement that I, bought supplies in Costco? Like, doesn't it say Costco? Like 750? No, right? Because Costco can be used and abused for personal reasons. IRS is not stupid, guys. Don't get cute with the IRS, okay? Now, we live in a world that is technologically advanced. There are many apps out there that you can use to quickly take a picture of your receipt, and this app will sync with your bookkeeping software, whatever that software is. And if you don't have that integration, you should definitely get it right now. If you're not doing bookkeeping for yourself, if you have been fooled by QuickBooks saying, don't worry, you don't need an accountant, you don't need a bookkeeper, here's a software, you can do it yourself, or you're having difficulty, why don't you try out one of our reps? It's so such baloney, okay? It's all BS. You need adequate bookkeeping. As a matter of fact, bookkeeping saves you a lot of money on taxes. I know, because guys, we do tax planning for our clients. When we get a new client and they give us their set of books, by doing adjustments on their books, just from the high level view, we save them a lot of money on taxes. But imagine if it was done from the initially, there's probably a lot more savings there, right? So documentation is the key. When you have a certain receipt, now we live in a technology advanced world. Most of the receipts get emailed to us, most of the invoices. As a matter of fact, you can quickly forward this invoice to an app that you use that stores your invoices. It will auto scan that receipt, right? It will read that receipt, appropriately categorize it because it memorized transaction from before and sync it with your bookkeeping file. Now IRS is not going to accept just a check that you wrote out to a vendor. You've got to have invoices. You have to have invoices, okay? So documentation is the key. When you're using tax planning strategies and you're planning to save money on taxes using tax strategies, one thing we're preaching with our clients, you gotta document it, right? So when you buy things, when you go out to dinner with business clients, prospects, employees, right? You've gotta document it, because IRS, what will they do? They're gonna come in and they're gonna say, okay, we wanna audit this, and this item. Now, when you are getting ready for an audit with your accountant, and if you have a competent accountant, I've just heard the story. Terrible what happened to this individual, okay? So a taxpayer got audited. He contacted his tax accountant. He said, okay, great, we're gonna need to respond to the IRS. Then the client gave the tax accountant the whole bunch of things that I needed, right? Everything. They just gave him everything. So the tax accountant's job, who prepared the taxes, has to, all right, speak to the IRS, right? You have to be that point of contact, right? And then take whatever IRS is asking for, not more, not less, for example, and give it to them. This accountant just forwarded everything to the IRS. Like they don't need to get all of that nonsense that you have. They don't need to know what's going on. You give them what they ask for, and you give it to them with proper documentation, clear and precise. And IRS are human beings. They're overworked by the IRS. I showed you the numbers before. They've got more on their hands they can handle. They want to get rid of this audit as much as you do. Make it simple on them. Make it simple on you. Document it. Now, we might say things about IRS agents or revenue officers out there to get us, but they're human. And we're human. And just like you want your clients to make your life easier, your customers, so they do, right? So, sympathize with them. So, start with documentation. Sympathize with them and yourself. Proper documentation. Getting ready for an audit with documentation, giving them everything they want and need, appropriately, bam, organized. Guess what? That is going to make your life much, much easier. Now, one of the things they're going to be focusing on is S corporation owners' salary. Okay, the fact is more than 250,000 S corporations that were filed, okay, have more than $100,000 in profit. Now, right? There were more corporations filed. Excuse me, I got like a tongue twist. Now, they filed those that are 100,000 more in profit reported no salary. As an S corporation owner, you should have a reasonable compensation. IRS wants to pick the easiest fruit to go after. It doesn't matter if you're making less than $400,000 or not. They're going to be like, oh, what is that? Oh, no salary. As a matter of fact, I challenge you. Open your business tax return for an S corporation if you file as an S corporation. Line 7 of that S corporation says officer compensation. If that number is blank, ladies and gentlemen, you better get ready for an audit, because you will get audited, because that is one of the things IRS will be focused on. Another thing IRS will be focusing on are shareholder loans. Okay, now when the corporation, when your S corporation doesn't have enough money to give you as distributions, but it still gives you the money because it has the loans on the books, right? That distribution is called excess distribution. That means you're taking more money from the S corporation than you have an equity in. That means that money is now taxable to you under capital gains rules. Now, what a lot of accountants do, no, that we can't have our clients pay that tax. No, we can't. Our clients are going to fire us. We can't be the deliverer of bad news. But first of all, it's not accountant's fault what the client did, right? So what does an accountant do? Without client knowing, almost like 98% of the time, the taxpayer doesn't know what the accountant is doing. The accountant is reclassifying that not as a distribution, but as a loan to shareholder. Okay? So because loans are not taxable, oh, that's okay, you're just going to pay back. And sometimes they're like, oh, by the way, I've done this thing, you just have to pay it back, and everybody forgets it in the next 5 years. I had so many clients, I'm like, what's this loan right here? It says, there's a loan to you for $160,000. I have no idea, I don't remember. Then they start researching their email. Oh yeah, my accountant said 1 year I would have to pay back. No, IRS is going to be like, you've got a shareholder loan. Did you document it? Did you have a loan agreement? Did you pay back interest? Pay back to the company? When are you planning back to pay the loan? No. That is going to be a distribution, capital gains tax, done deal. So these are the things they're going to be focused on. Now, we take this, by the way, these things very seriously in my firm. Every S corporation has a reasonable compensation, shareholder loans. If the client is taking the money out of the business, we ask them, loan or distribution? And if he says loan, we make sure he has a proper documentation, because we want to protect our clients, but clients should also be, you as a taxpayer, should be careful enough to protect yourself, okay? Next, cryptocurrency transaction, okay? So guys, I don't know if you know this. Ladies and gentlemen, if you're watching this video, I don't know if you know this, okay? But the cryptocurrency transaction, all right, IRS is asking you a question on the first page of your tax return. It says, hey, did you sell or buy cryptocurrency? It's asking you a question about cryptocurrency on the first page of your tax return. That tells you IRS is serious about it. If you're one of those people that thinks nothing's going to happen, I've had people tell me, I don't think IRS is going to, I don't think they're going to do it. I don't think. I'm like, what? What do you mean? Not our clients, by the way. Whew. I don't want those people as clients. But yeah, I don't think, I'm just not going to report it. I'm like, no. IRS is going after it. Okay? They want to know, do you have crypto? Do you sell crypto? Do you buy crypto? And do you do it properly? Okay? Do you do it properly? They're going after this. So you want to make sure you tell your preparer, tax advisor, whoever you're working with, hey, here's my old crypto information. Download everything from either Coinbase, Robinhood, whatever that is. Properly document, keep track of all your purchases and sales. Don't just rely on this app and stuff, right? Make sure that when you log into your app, you go to the tax forms, tax information, year-end information, and get that stuff. Offshore accounts. One of the questions IRS asks on the tax return, somewhere buried by the way, right? Do you have a foreign bank account? If the answer is yes, that's fine. You just check off that box, think it's Schedule B. Is your foreign account has more than $10,000? And if you do not report, and if the answer is yes, you have to actually report every foreign account that more than $10,000, because people start doing these offshore things, start trying to hide money in these areas. A lot of people will be like, I've had questions, well, Boris, what if I go out on islands and open bank account? How do these big companies do that, all that stuff? They hear all this nonsense on the Reels and TikToks and so forth. No, IRS wants to know if you're doing that kind of, IRS wants to know. And they're like, that is the question, by the way. As a matter of fact, we ask this question on every tax organized that we have for our clients. Because penalties for this? Meaning to say, even if you legitimately have, let's say you came from another country, came from France, you got $50,000 in your French bank account, you didn't answer this question, IRS is going to penalize you for not disclosing this. Penalties on this really high. And now IRS is putting pressure on taxpayers and the banks for reporting. I've had a client years ago that came to me, nice Indian couple, older couple. They came in with a letter. I used to work for a CPA tax firm back in the day, doing like returns and stuff. And guess what? IRS inquired of Indian government, do you have any U.S. taxpayers that have in your bank account more than $10,000? When they gave them back that report, IRS compared it with the database, said, hey, who didn't report? We gotta send them a letter, right? So guys, this stuff is happening, okay? Partnerships, basis allocation. Majority of these partnerships that they're going to be focusing on, like a lot, right? I shouldn't say majority, but one of them is really a real estate syndications. What are real estate syndications? You've got a developer or investor, right, saying, hey, I want to build this piece of real estate, or I want to buy this piece of rental real estate, 200 apartment building, 200 unit apartment building, right? And now he gets together all of the other investors. Hey, do you want to get into this, right? This is called real estate syndication, right? Hey, do you want a piece of this? Do you want a piece of this deal? Do you want a piece of that deal? And so forth. And they all come together. How they allocate their basis, what they put into that partnership, is often done incorrectly. IRS is going to be focusing on that. They will also be focusing on passive activity rules, like, hey, because real estate losses, right, they're considered passive losses. They're not deductible against your business income. And IRS says, hold on a second. This individual right here, who's not a real estate professional, invested in a syndication, which is okay. IRS allows it. It's no problem, right? But the loss that he received, he said, this passive loss is deductible against his income? No way, Jose. It's not deductible because the taxpayer might not qualify for certain things, or the partnership issued it to him wrong, a wrong K1. So these are just one of the few things. And the reason I wanted to mention this particular things, because these particular things apply to everyday small business owners. And everyday small business owners are started getting more and more into syndications, real estate, especially you watch all these reels and YouTube videos. Oh, by the way, the best way to save money is on real estate. We've got the syndication deal. Who wants it? Blah, 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 blah. You want to get a great tax write-off. Not so easy, okay? Not so easy. Anyways, I hope this was helpful, ladies and gentlemen. Make sure to subscribe to my channel. Every Tuesday we'll release tax strategy video, and I hope you enjoyed this. Till the next time.